Hi everyone, welcome to the channel. Today our focus is going to be on the company Patrick Industries, ticker PATK. Now I'm sure many of you have never heard of this S&P 600 company before, but they are a leading component solution provider for recreation vehicles, marine, power sports, and housing. Now, the company has grown significantly through M&A over the last 10 years, increasing its market cap from about 400 million to more than 2.4 billion. And I wouldn't be surprised in a few years if the company is moved from a small cap to a mid cap and joins the S&P 400. In this video, we'll look at Patrick's financials, perform a stock valuation, and at the end of the video, we'll look at my previous computer modeling for the company and perform an updated forecast for the next 52 weeks. But since this is a company that I own, we'll look at my purchases into the stock and my portfolio performance overall first. So let's jump right into it. So here are all my investments into Patrick. We can see I started back in March of 2022 and bought in a few times throughout that year, with the last time being in September of 2022. Now, I think I kind of lost track of Patrick Industries in my portfolio a little bit. That's why I haven't been buying in to the stock since then. And we can see up here the overall return with dividends is just over 80%. While if I purchased into the S&P 500 on the same days with dividends, my return would be just under 20%. So Patrick has paid off very nicely, especially compared to the S&P 500 since I owned it. And you can see on each line what the returns are for Patrick Industries and the S&P 500 for the days that I bought in. Now, down at the bottom is just the overall summary of my investment into Patrick. We can see my investment is about $20,000, $21,000 or so, and the current value is just under $37,000. So again, has been a nice return so far. I have no plans on selling, but if the price does drop, I know it's a little high. It's near the all-time high, or it's at the all-time high. I'm not really a big fan of buying in at the all-time high, even if I feel it's below my intrinsic value. I like just seeing a discount even to its all-time high. But let's move on. I'll just show you how this compares to my overall portfolio. So here's the portfolio performance for the day, February 16th. We can see it's a little mix, some green and some red. Overall, it was down about $7,000. But Patrick there in the center at the bottom was green, up 0.76%. And you can see the position size relative to the others. So it's about the same size as Snap-on. But you see Palantir and Berkshire are a little bigger. And there are several other smaller ones like Lockheed and Toll Brothers and Smith & Wesson. But let's look at the overall performance relative to the portfolio as well. And for the overall performance, we see there Patrick at the bottom up almost 77%, and how it compares to the other investments. But let's move on and we will look at their financials next. So for their financials, we'll look at their dividends first, and we can see they started paying that back in 2019 and has been growing ever since. And they already reported that for 2024, they're going to increase it again, I believe about 15%. So this is definitely a positive sign for Patrick, and we're going to give that a check mark. And then for shares, we can see it's a little mixed, some up years, some down years. But 2023, we can see it is down almost 10% from 2022. And overall, for the past 10 years, down about 8.5%. And I believe moving forward, it sounds like management's going to focus on buybacks. So hopefully we're not going to see this fluctuation. And because of that, I am going to give that a positive sign. And then revenue and revenue per share. We can see from 2014 to 2022 increasing nicely over those years. However, 2023, we can see the pullback. Revenue down 29%, and on a per share basis, down 21%. Now, management did discuss this. They feel 2021 and 2022 a little abnormal for their revenue growth. We can see 21 up 64%. So a little unexpected, and that had to do with the pandemic and people trying to get out more, doing a little more outdoor activities that they weren't doing previously. So that kind of caused a spike, according to them. And also the current financial situation with high interest rates, that is somewhat impacting their sales as well. RVs, motorsports, and such. They're pretty big ticket items and more of a want than a need. But they do feel the biggest pullback in that is behind them, and moving forward, they should start seeing sales starting to increase. But I am going to put this more down as a caution until they can show that the revenue and a per share basis is starting to tick up. So let's just put that as a watch item as we move forward and we see their upcoming quarterly results. Now, net income and earnings per share, we can see 2023 has that same drop off from 2022, and for the same reasons that we discussed in revenue. Now, you might be thinking that the stock price must have dropped once they released these results. However, it's actually up slightly from 2 weeks ago when the earnings were released. And that's because they actually beat on expectations, and the reason why the stock's up. However, for this, because it has dropped off, and though management does feel they should get back on the right train, moving upward, I am going to do the same thing as listing this as a caution, just something to look at in the upcoming earnings calls as we move through 2024. So I'm going to put that as a caution just to look out for. And free cash flow per share, nice positive sign here. Now we can see free cash flow up 3%, and on a per share basis up 14.5%, definitely helped by those share buybacks. Now you might be wondering, well, net income's down, revenue is down, how's free cash flow up? And management does discuss this on the recent earnings call. And if you're interested, I suggest listening to it because they do get into detail about this. But nonetheless, good positive sign here and putting a check mark. And I do expect this to move forward, continuing to increase, helping with those dividends, increasing those dividend payments over time, and hopefully continuing to buy down the outstanding shares. Then book value, which we can see here, growing nicely every year for the past 10 years, and it's up over 1,000%. And one of my favorite quotes from Buffett is, when book value increases, stock price will follow. So this is definitely a check mark and a good positive sign here for Patrick. Now, return on invested capital, I like seeing 10% or higher. We can see here for most of the years, they are over 10 and really over 12%, except for a few of the years. And one of those is 2023, where we can see it's down just over 6%. Now, this probably has to do with the revenue and net income being down, impacting return on invested capital. But I am optimistic about the future of Patrick. I think they will turn everything around over the coming quarters and years. But I am going to just put this as a caution because it is down, and especially because it's the lowest it has been. But moving forward, I am going to be optimistic about this company and do have a positive outlook. Now, net profit margin, I typically like seeing companies over 10%. Obviously, here, Patrick is normally below that, in that 5% range. And we can see 2023 at 4%. So it is lower than the prior 2 years, but it's not at the lowest. We can see back in 2019, 2020, under 4%. So I am going to give this a check mark because it's still in the area where they normally trade. But normally I try to find companies over 10%, but Patrick is one of those exceptions. And even though the net profit margin is lower, they have been able to increase their share price over time. We saw they're increasing their dividends, and I do expect them to buy back shares. So I still have a positive outlook, even though their net profit margin is a little lower than I normally go for. Then long-term debt to free cash flow, I like seeing companies under 3. We can see, at least for the most recent year, they're under 3 based on that free cash flow. And it has been tracking down over the past couple of years. I know typically it has been higher, but we can see it is down. And I am going to give this a positive sign because of that. Now, I know we have a few caution signs here for Patrick, but I am optimistic about their future, for their growth, for their opportunities. They're a well managed company, and I am holding on to this stock. I would like to buy into it, but it has to be at the right value, and we'll get into that in a few minutes when we look at their valuation. But though there are some cautions here, I'm not that concerned. It's just more of a watch item to make sure I look at it once I see their quarterly results moving forward. Now, looking at some valuation ratios, first of all, we'll focus on the PE, and that red line there just shows what it's currently trading at, which is about 17. And we can see that it is slightly higher than where it's normally trading. It's in that 13 to 15 range. So it is slightly higher, but not at the highest. We can see back in 2014, 2015, those years were higher. So I am going to give this a check mark, though it is trading at the higher end that it normally trades. The price of sales 0.56 for the most recent earnings. We can see the only other year was this low was back in 2020. All the other years trading above that. So this is a positive sign based on this ratio. Then enterprise value to free cash flow, same thing on the lower end, 9.2. Typically, it's trading above that in that 10 and higher range. So this ratio also a positive sign that it's undervalued. And then enterprise value of the sales, you see 0.93 for the most recent year, and it's probably right in the middle for the average over the 10 years. So going to give that also a positive sign. So not showing that it's overpriced. Really the only one is the PE kind of ticking up. That's on a higher valuation range. But let's move on and we'll perform the stock valuation. Here's the valuation for Patrick Industries, and we can see intrinsic value just over $166, and with a 70% margin of safety, brings it to just over $116. Now, this is based on a 9% short-term growth rate over the next 10 years, with a 10% discount rate and a 3% long-term growth rate. Now, you might be wondering why such a heavy margin of safety at 70%, and that is because they are an S&P 600 company, so a little riskier for a small cap. So just taking that into account. Also, their industry, RVs, motorsports, and the such, more of a one product than a need. So if there is a downturn in the economy, not very likely as many people will be buying into it. Also, with higher interest rates, it is slowing down their sales, as we discussed in their financials. So I just want to be conservative on this valuation. But up here, we can see that their net income CAGR over the last 10 years is just under 19%, and the earnings per share CAGR just under 20%. And I am actually using a short-term growth rate of 9%, so about half. So again, being more conservative for this company. And while the stock is currently trading around $111, so it is below my margin of safety value. However, that $111 is at the all-time high. And like I mentioned earlier, I'm not really a big fan of buying into companies at all-time highs. So I'll look to see if the price drops in the coming weeks, coming months, maybe getting down to 100 or and into the 90s. I'll consider buying into it. So as I mentioned, I am very optimistic on Patrick. Plan to hold on to this stock for a while. But let's move on now and look at my previous computer modeling predictions and see how they came out, and then perform an update for the next 52 weeks. So here's the previous computer modeling predictions that was performed back in August, and I'll put a link to the video for that in the description below. But we can see the methods used. So in blue, M5 rule, green is random forest, and yellow is the average of two methods. Now I'm going to add another line color. It's going to be red, and that's going to be the actual stock performance since these predictions were made back in, I think, August or September. With the actual stock movement now shown in red, we can see initially it had a drop off in the stock price. However, since the stock started to recover, and really since about early December, the stock price has been tracking the M5 rule very closely. But we're going to move on and we're going to perform a new computer modeling for the next 52 weeks. Here we are in the computer modeling software, and I already ran the analysis using two methods. First, the M5 rule shown here, and random forest. And this data is as of this previous Monday, February 12th. And the far right-hand column is the weekly average stock price for Patrick Industries. We see just over $109. Column right next to it is the weekly average for the S&P 500 ETF at 494, and various other columns is just other data points used in the analysis. And I already copied and pasted all the results and put it into Excel as it's easier to see. But we'll just scroll down 52 weeks and see what the outlooks are real quickly before we jump over to Excel. And we can see out here for the M5 rule is showing a nice gain for the stock, closing out in February of next year, just under $130. But let's jump over it. Look at random forest real quick. And same thing for random forest. Data is as of this previous Monday, February 12th. And scrolling down the 52 weeks, it's actually showing a drop in the stock price, going just under $90. But let's jump over to Excel and look at all this data a little closer. Here in Excel, I got all the data pasted from the computer modeling. And first thing I'll point out is the vertical red line represents this previous Monday, February 12th. And everything to the left of that vertical red line is a historical stock price for Patrick Industries, and everything to the right would be the computer modeling. And I'm just showing this real quick so everybody can see the history of the stock price movement back from 2009 to where we are today at that vertical red line. Now I'm going to jump over to another tab where we can look at the computer modeling results a little closer. Looking at the M5 rule first, it is showing the stock price leveling off for a few months or so, but then in April starting to tick up and eventually getting above $120 with a slight pullback in October, though it does recover and close out to 52 weeks in February of 2025, just under $130 for a gain of about 18.5%. While Random Forest shows a downturn for the stock price and pretty much continuing throughout the year, and in February 2025, closing just under $90 for a loss of minus 18%. Yeah. Then taking the average of the M5 rule and Random Forest, initially it is showing a drop in the stock price, but then recovering into the middle of the year with a slight pullback out in October, but then recovering again and closing out the 52 weeks at around $110, so about where we are today. To recap, I believe the fair value to buy into Patrick Industries is between $116 and $166, with the lower end taking into account a margin of safety, while the current stock price is trading around $111. And though the current stock price is below my margin of safety value, it is still trading near an all-time high, where I typically don't buy into a company at market prices in that range. So I'll hold off for a potential price drop and then look at buying additional shares at that point in time. For the computer modeling, the M5 rule is showing a nice gain in the stock price over the next 52 weeks, closing in February 2025, just under $130 for a 18.5% gain, while Random Forest is more bearish with a February 2025 stock price under $90 for a loss of minus 18%. Now, I hope you enjoyed this video, got some useful information. If so, consider subscribing, and I hope to see you next time. Thanks for watching.